I must apologize for the poor start of this presentation. I'll start again. So my name is Ayesha. Welcome to this presentation on regulatory technology this morning. I'm going to be taking us through what regulatory technology is and the various aspects of it. This is the second in a series of presentations on regulatory technology, and we had one last week. And based on that, we decided to come back and talk about regulatory technology again this week. Pretty much regulatory technology, or RegTech as I will be calling it going forward, is pretty much using technology to drive the concepts of managing regulatory risk and compliance. That's pretty much what it is. And pretty much an offshoot of financial technology. So it's a sub of financial technology, if you like, where we see the use of technology aiding compliance and risk, both on the side of the regulators as well as the side of the clients, in this case, the users of the compliance and rules. And the idea is that we start to use or start to see compliance and risk as a pretty important part of our businesses, because we realize that the regulator in various fields, and we will focus largely on the financial services industry, the oil and gas industry, and the telecoms industry in Nigeria. The various regulators in these industries are quite big on ensuring that we follow the rules and regs of the game. And the biggest thing that happened in regulatory and compliance was the 2008 recession, the global recession, where we saw subprime loans in the US impacting on everybody. And what we realized was that because we were not monitoring or ensuring that the financial services industry at that time was given a leeway, a freeway in doing things, it actually led to a global recession, and not just the US. Over the years, without us realizing it, we would have done some aspect of regulatory technology or used some sort of technology to do some reporting within the compliance and the regulatory space. So historically, we would have used some sort of manual system. And the manual system would be typically to use some sort of spreadsheet to capture or to represent information or even paper. We submit paper to the regulator to ensure we do this over a period of time on a cyclical basis. What we then did also was to, the manual system is what we will find a lot in those three sectors, in financial services, in oil and gas, and in telecoms. Beyond that, we should have been introducing, or we have in most cases, introduced some sort of workflow automation into our compliance environment. So a lot of businesses have introduced compliance software, regulatory software of some measure into their environment. And this takes us to some workflow environment where we start to see some level of automation in compliance. Where we ought to be typically in the neck of the woods we are in Africa, or in Nigeria in particular, is that we should be doing some sort of continuous monitoring. So continuous monitoring will be that we're using some sort of data to automate the back office. Now, so we, at that point, would have moved away from using just a regular workflow to using data to monitor compliance effectively. Beyond this, we will then start to see predictive analysis where we use artificial intelligence and machine learning to predict what the problem will be. So even before, when we have a set of rules and regulations that we must adhere to, the idea is that we use AI and machine learning to see the problems before they actually happen. And in terms of this, we would see the use of regulatory technology largely in compliance management, for example, in risk management, in capital planning and stress testing, in transaction monitoring, in reporting, in communications monitoring, and those areas. The global regulatory tech market is quite large, and we are increasingly seeing a huge demand for regulatory technology across the globe. We're seeing figures of $118 billion by 2020, according to Gartner. And more importantly is the fact that because regulators in different industries are a lot more alive, so to speak, in quotes, we're seeing quite a rush of regulatory revisions regularly. So there are a lot more regulatory impositions by regulators all over across different industries. At the same time, we're seeing an increase in fines issued by regulators. So, in the US alone, there's from 2008 to date, there's about 320 billion in fines in the RegTech space. Largely, the market across telco, financial services, oil and gas is hugely driven by compliance. So you would see that 30% of the market for RegTech is driven by compliance. Risk management drives about 18%, ID management and control 26%, regulatory reporting 13%, transaction monitoring 13%. So largely compliance, risk management, and regulatory reporting will give you the more than half of the size of the market totally. Sorry. The market basically is made up of different industries. And if you look at this display right now, we're looking at the reason why the market is so large. So we're not going to run away from paying fines if we don't do things right. We're going to keep getting hammered with fines all the time. Avoiding and being smart with legalese will not avoid us paying fines and bills. And case in point, we know we see daily in our industry and in our economy, I beg your pardon. Firms keep struggling to keep up with regulation because there's a rush of regulatory notes coming out daily by the regulators. But more importantly is the need to partner and collaborate with the regulators. So regulators should not be a mile behind us, because what happens is that when the regulator is not on the same space with us, we will falter and the regulator will issue notes that may or may not be relevant to the reality of the industry at this point in time, largely because we as profit-making institutions tend to want to do things on the border of testing the regulator as much as possible. So we'd see regulatory technology in financial services, in government and legislation, in information and cybersecurity, in general compliance, vendor risk management, and I've sort of put in here tongue-in-cheek, even in cannabis. So there's this huge brouhaha around growing medically cannabis for medical use. And even in the papers today, I've seen NDLEA burning cannabis in Ondo State, and Ondo State is trying to grow cannabis. And this is all within, I guess, in a way, the NDLEA being the regulator for cannabis growing at this point in time. So these are real issues in our local system. Now, what do we consider to be the ecosystem for regulatory technology? We have the regulators. So the regulators would be, for financial services, would be anybody from the central bank to SEC, and other people like that. For oil and gas, it will be your DPR and your NCDMB. For telcos, it will be the NCC. So the regulators will continue to ensure that we practice or we run our businesses in line with the objectives of good business practice and, of course, the federal government of Nigeria. Beyond this, we have the professional services companies. Now, the beauty of RegTech is that it is not a technology-driven ecosystem. It's more a collaboration between professional services and technology, because there's a huge learning gap and there's a huge basket of knowledge sitting with professional services companies. So law firms, audit firms, accounting firms, compliance firms, risk management companies that are able to take the interpretation of the regulators and explain to us to ensure we do things the right way. So we see a huge contribution and collaboration in the ecosystem with professional services companies, and a big handshake between professional services companies and RegTech firms. Now, RegTech firms, the space is huge. I mean, it will be anybody who has the capacity to provide the technology as an aid, not as the solution to the regulatory space, as it were. So basically, you are if you're a tech company in this case, you would be providing the basis, the foundation, if you like, the support to the professional services companies who are the knowledge experts, who have the know-how in terms of how the regulations that we get on a daily basis should be adhered to or used by the clients to ensure they do not run foul of the law. So this is quite important that we and I said this on the last webinar, that we should, I see that we should come together and create some sort of forum, some platform where, we bring in the regulators, we bring in professional services companies, we bring in RegTech firms, and we are all doing work to ensure that the client is not paying fines, because at the end of the day, the reason why there is RegTech is because we have said that technology will help ensure that the client adheres to regulatory issues as well as possible, and compliance issues as well as possible. So for the client, the value proposition is you will not, if you do these things using technology, pay as much fines or run foul of the law as you would ordinarily have done. And in terms of, just to bring us up to speed in terms of regulations globally, I mean, there's a rush of regulations each and every day coming out, and even till to date. So, there's KYC, there's AML, there's MiFID, there's PSD2, there's GDPR. And these things don't stop across industries. So it's very important that we recognize that we can use technology to aid our understanding of RegTech. In terms of technologies, and this pertains to people who are in the technology space here listening to the webinar, there's quite a lot to do here. I mean, it's not a one-man show. There's opportunity. The technologies being used on a day-to-day basis in RegTech include cloud computing. So we do everything in the cloud as much as possible. We use blockchain, where we start to use technology that allows us not to keep information in one silo. So we're able to distribute data and bring that data together in any location, so we are not stuck with one silo of information. With APIs, we're able to integrate our existing systems with the regulatory technology. Machine learning, we're looking beyond basic spreadsheets and workflows to be able to predict what we're going to do or what might happen if we do not do the right thing with regulatory and compliance issues. Big data, again, data mining, analysis, predictive analysis. These are all in the space of ensuring that we can use data to manage our compliance and regulatory issues. Smart contracts, contracts that we will put in place to ensure that we do not, and smart contracts use blockchain. Again, we are not keeping information in one silo. We can basically ensure that the contracts are foolproof and they're not breakable because they're different distributed systems that are used in smart contracts. So the goal here is we have data. Our data is complete. Our data is efficient and accurate. We're able to respond. But in all of this, we are managing our risks in terms of ensuring that compliance and regulatory issues are kept at bay, as efficiently as possible. I'm going to take some time to go through some examples of what I have come up with as process flows in industry subsectors that I mentioned earlier, largely oil and gas, telecommunications, and financial services. I'll probably start with financial services. So this is a standard KYC monitoring process flow. And the idea is that we all have, if you're in the financial service industry, for example, you have spent a bit of money putting in KYC applications, and what do you do beyond that is what this will address. How do you ensure that I still live at my address 3 months later? How do you ensure that my ID is still valid? How do you ensure that I'm still verifying who I am in 6 months' time, and not just the first day I come into the bank or into the savings and loans or wherever it is. So your KYC monitoring tool will help you ensure that beyond just capturing the information, you're continually ensuring that you do not run foul of the law, because your KYC does not stop at the point of acquisition of the data. It's a continuous process. You continue to ensure that your KYC information is up to date and not outdated. In terms of compliance, monitoring, and reporting, what we have here is a good example of what I said earlier in terms of collaboration between tech companies and experts, professional services companies in various industries. Now, what we design here in terms of a solution is to design a solution that allows you to bring together the know-how of professionals with technology. So in this case, for example, the regulator issues a certain circular. That circular is then interpreted by an expert in that section or in that field or in that profession. So if you're a lawyer, you would take that regulation and explain it to business, typically is what you will do. If you are an auditor, you will take that regulation and explain it to business, the do's and don'ts of it. But what we find is that does not work all the time, because the client is busy as a profit-making venture that he forgets 9 times out of 10 to ensure that he does those things right. And so if we use technology to prompt him, to manage him, to ensure he realizes that the information is there, to allow him to remind himself of deadlines, allows him to escalate and also escalates if where you send a piece of information to a user and he doesn't use it, you can escalate to somebody at a higher level. You are helping to ensure that compliance is not just at the level of paper, but also using technology. So basically what we designed is to say, look, where there's a new rule or a new piece of information, we will get the relevant professional services company to interpret this. We will then put this in some sort of repository where we would notify the client on a subscription basis or whatever it may be at that point in time. And the information is available, not just available, it has been interpreted by the professional. We are able to monitor that the information is being used. We're meant to monitor that the reporting requirements of that piece of information is adhered to. We're able to escalate where we do not see any movement. So, for example, the user can set dates for himself to say, remind me in a week's time to ensure I do this. And if he doesn't do it at that point in time, you can then notify his manager or her manager to say, look, this thing is going to be due at the end of the month, and this chap hasn't done anything about it. So this is a classic case of, where we're bringing together know-how with technology to ensure that the client is doing things in tandem with the expectations of the regulator. And this is another example of where we've used, and this came back from feedback from talking to people in the industry, where people have the concept of a rule book. So a rule book is basically a journal that adheres to not just the regulator, but also to what you have decided as a business to do. So not only it is good that the regulator, and this question came up the last time, yes, you can use it as a rule book for what the regulator says you must and mustn't do, but you can also set higher standards for yourselves and say, we will do a bit better than what the regulator is saying, such that when the regulator comes knocking, we would have adhered to the regulator, but also because of our professional practice and the way we want to do our business, that we're going to put into place a different set of rules. So your rule book or your regulation journal, as it were, ensures that we do business the right way. And where we don't, there's an alert system to whoever is beyond that particular process. And we also manage our tasks in terms of ensuring that our business processes are right and our transaction processing is right as well. So basically, at the end of the day, what are we trying to achieve here? We're trying to achieve effective compliance monitoring, and compliance monitoring as dictated by our regulation journal, our rule book. Our rule book, again, is what we've decided to be our standard within the entity, which may or may not be aligned with what the regulator has issued as the rules of our business. In the oil and gas industry, I've used this example of the local content monitoring board in terms of how they affect monitoring and specific to compliance monitoring. So the NCDMB has something called compliance monitoring amongst its operational model. And basically the idea is that all the oil companies, the oil and gas companies, the service companies, and up to about 4 or 5 layers down the road, do some sort of reporting on compliance issues on a regular basis, their rules of what should be and should not. And this process can be a lot better in terms of how it is done today. So just to point out that, this exists and there is a need for effective compliance monitoring, even with respect to content development, local content monitoring within the oil and gas industry. So there's a rush of, the statutory reports that are on a regular basis. And then obviously there are scheduled and unscheduled audits. And as today, what you see historically was people would send huge wads of spreadsheets and documents to NCDMB and I think they're doing some sort of spreadsheet across the internet now, which is pretty much if you remember the phases of monitoring I said earlier in terms of RegTech, this is still phase 1. We're not doing any workflow processes. It's not automated. There's no continuous monitoring. It's pretty much spreadsheets at this point in time. So I've also taken a case in terms of the telco industry. So how does RegTech help the telco industry largely? And this is quite interesting because, the telco industry was pre-built in terms of ensuring that regulatory infractions are avoided because it's technology really. So how do we start to think about timestamps to data storage, and the issues around number portability databases. How do we ensure we comply with NCC? Record of storage of call detail records. When people then come up and ask for them at a later date, and things like spectrum allocation, secure and encrypted storage of network configuration and log files, which will come up at some point because the beauty of the telco industry is there are many players involved in one, if you like, one contract. So it's going to be either a wholesaler, an interconnect, or 2 parties and the regulator in between. And so the regulator needs to start looking at how we can use technology to ensure that telcos, in the first instance, telcos adhere to the rules of the industry, but more importantly, that the regulator himself then comes into the space of understanding how the technology has changed so much that playing catch up will always be a challenge, and this raises issues around things like KYC and data scrubbing and the information that the telcos have acquired in the past not being correct, and then the NCC is telling everybody today go and scrub that information and make sure it's clean because it's not right, it's not correct. And again, if you think in terms of numbers, in terms of costs, we're having to redo, spend extra resources, going back into doing things we should have done right in the first instance. Perhaps if the regulator had asked us to do it right in the first place or given us the right rules and regulations to do it in the first place. I've used a case in point here of India's telecom regulator, TRAI, and how they have used blockchain. Again, if you remember, one of the technologies I mentioned earlier was the use of blockchain in regulatory technology. And they've probably just used the blockchain they actually came up with a circular or instruction that says that telcos in India must use blockchain-based technologies to enforce quite a number of things. So for example, the opt-in of telemarketing, you must show the records that tamper-proof and encrypted ledger of consent records, spectrum monitoring, automated platforms for telecom licensing, QoS, and spotnet neutrality. So you have a situation where it's typically, and I would believe the reason why blockchain is being used in this case is it's not me, it's you. You have no proof, I have a proof. And so when we start to use technology that allows us to isolate and keep away from one central silo, so I keep my records, you keep your records, and those records are independent of our ability to touch them. And when I say touch them, we cannot play around or we cannot fidget with those information, because there is a need for me to change that information means that I must change it across perhaps say 30 different locations, which I do not have control over. So the minute I have a transaction or I have a record or I have an activity that is recorded, it will really take for 20 of us to change that information, because that information is replicated in 20 different locations. It will take, and this is an example, it will take 20 of us to change that information at the exact time, on the exact date, at the exact second for that record to change, which is not impossible, but highly improbable. And so this is probably why the regulator in India decided to use blockchain to enforce smart contracts and records that need some form of validation beyond today. So to end this webinar, I'm just going to go through a quick demo screens of a solution we built around compliance monitoring and reporting. And this is what I said earlier when I spoke about us being able to use various professionals to ensure that we provide the right information for clients, and that the professionals will be able to help us ensure that the information is properly understood and that we're building the right, if you like, the right technology to aid the information that is being pushed to the clients. In this case, this is a compliance monitoring and reporting tool. Your usual login screen. It has a reminder list where you will be reminded where you need to do stuff. So if you have if there is a task you must complete by a certain date that must go to the regulator, you can set the reminder. You can set when the reminder should occur. You can create as many users within an organization. So an organization, in terms of subscription, is the organization that subscribes, and then the organization decides on how many users they want to be part of the compliance team. And then there are different sectors: financial services, telecoms, energy, insurance. And this is pretty much a screen that shows you the various subscribers, what company they are from and when they started using the service. This is a screen that takes you through your reminders. So how often do I want a reminder for a particular activity I'm working on to happen? Is it every minute? Is it every 30 seconds? Every 30 minutes, I beg your pardon? Is it every hour? Is it once a week? And I can add the document into it. Now, the add document basically is where we see the professional services companies come in and work on the compliance notes or the regulatory circular and ensure that it is understood by the users or the subscribers in this case. In terms of benefits, to wrap up, again, we cannot but appreciate that we would do better if we are able to move away from the very manual and, if you like, the workflow state into more continuous monitoring of our compliance and regulatory issues. We can do this at any point in time. We can do it across different businesses. And pretty much the key thing is we shouldn't want to pay fines. And I know in oil and gas, in telco, in financial services, we're continually paying fines, which we detest, and we try and find ways of not ensuring, but they're not going to go away. No matter what we do, they're not going to go away. So wouldn't it be better for us to avoid those infractions in the first place? And just to put a point there, according to S&P, we're seeing fines into the billions of pounds in the UK. These are major costs in terms of what it takes, and not beyond that you also have a situation where you have different other professional services you will come into play with when you have to pay those fines. So basically, this is who we are. We're a consulting company, and we're looking to ensure that we bring the regulatory space. We should want to do it. Okay. This is who we are. In terms of compliance, we're a tech company, and like I said earlier, the bigger picture here is for us to see different professional services companies, the regulator, tech companies to come together on a platform to drive RegTech in a local environment. And to end this presentation, I think it's like I said earlier, it's easier for us to comply than non-comply. So if you think that, I'm going to spend money to comply, think of the fines you have paid or you will be paying if you do not comply. And no matter how we feel that we are ahead of the game, regulator will catch up with us, and then it becomes very sticky, and we have to go back and do stuff the right way, and it then costs a whole lot more than using the right tools to ensure that we comply as much as possible. We are available to talk to you at any point in time. We have our emails on the screen right now and our social media presence at the same time. So pretty much end of the presentation, and if there are any questions, I will take them at this point in time. Thank you very much.